Europe and America, step by step, moving back towards stagflation. Commodity market, how will gold and silver move? What can we expect for next week? We'll evaluate these in the second video. Let's get started. You know, on this channel, we've been constantly discussing the probabilities of stagflation scenarios, and we've said that this is something that rarely happens. Many of our mainstream economist friends, but later, as we saw the trend of stagflation increasing from time to time, especially in Europe today, officially seeing stagflation continue, it increased our belief. But stagflation periods are challenging times, and they are long-lasting periods since it doesn't resolve itself quickly. Stagflation is a formidable obstacle. So what is stagflation? It's periods where both inflation and stagnation exist, and overcoming it is difficult because if you raise interest rates to combat inflation, you end up causing more stagnation. When you have to lower it again, inflation flares up once more. You can't break out of this cycle. And right now, yes, in America, there have been some stagflation-like tendencies, then it turned optimistic again, and now we're heading towards a period where inflation is about to flare up again. Why? Because energy prices have sharply risen. In Europe, this has already officially begun. You know, official inflation is already very high, official growth figures have turned negative, so stagflation has started to affect almost all of Europe, especially Germany. Therefore, during these times, normally, central banks would have a hard time deciding whether to focus on raising interest rates to combat inflation or to stimulate growth. So, in this environment, commodities, in general, continue to rise in price, and instruments like gold and silver will be the safe havens out of necessity. We've been talking about this all along. Even though they may not perform at their best, they are struggling to break records against other currencies, the Japanese yen being the exception. Both gold and silver are hitting historical highs against it. The only one struggling to break records is against the US dollar. In the last 3 years, it has been up and down, but they are trying to break out of the sideways range for some time now. So, what's coming this week for American inflation? Why did we discuss all of this? Especially this week, when inflation data is released, the general consensus is that if inflation comes in high, interest rate hikes will continue, and gold and silver will drop, as some say. We don't agree with this. You know, there can be pullbacks, especially leading up to the data release, but after the data, no matter what it shows, gold and silver tend to move upward. Usually, until significant data is released, but I came across an interesting study. I came across a good study on the Gradhe Twitter account. It shows the 12-year historical performance of gold against American inflation. Look, when you look at it against American inflation, there is a nice chart formation. Technically, despite this, gold can perform well especially during inflation periods. There is a nice wheel formation in that regard. So, I'm not really concerned about inflation data. On the contrary, as we approach the inflation data or as the data is released, there is usually a counter movement, and I always use the buying side when it comes to significant data. It has been quite efficient recently, both in gold and silver. So, in that regard, I am thinking of trading this week as well, especially if there is a retracement and a correction movement leading up to the data because an increase is expected, especially with American inflation. And look at the rise in oil prices. You know, oil-related matters will continue to be negative. Similarly, I expect more upward movements in natural gas. It's interesting, Russia announced yesterday that they will sell gas to China for 35% cheaper. But in Europe, you know, they sell it for 35% more. So, it's a complete double standard, supporting one side and causing difficulties on the other. In Europe, they say that they have enough stock for this winter, but we are going through really strange times. Data may not reflect the truth. So, in that regard, I still think natural gas prices are extremely cheap. We will take a look at the chart in a moment. Yes, before we get to our charts, according to data released last week, we see that central banks around the world continue to buy physical gold. Look at the screen. There are data about how many tons each country bought, and last month, central banks around the world made 55 tons of purchases, again, in gold. Central banks continue to buy gold, and one of the most interesting ones among them is Poland. We see that Poland has been buying a lot of gold, continuing its gold purchases for the 5th consecutive month, and it bought 18 tons of gold. That's quite a significant amount. Poland is a small country, but you know, the risk of war has increased significantly there. There's tension between Belarus and Poland, so, with the possibility of Russia and Putin moving towards Europe, they may be worried. Poland's central bank is stocking up on physical gold in this direction. On the other hand, in China, the central bank continues to buy gold, and they have been buying gold without a break for 10 months, Whether gold goes up or down, they continue to buy gold. As they suppress the price of gold, the American and Western financial system continues to buy gold. Especially BRICS countries continue to buy gold. In the past, America used to repair it. They used to finance America's debt. Now it's not happening. So America is trying to continue by exploiting its allies, by printing money on them. But how long can this go on? They will have to use military force eventually. So the Russia-Ukraine war was an example of this. After that, Germany's tank and military spending reached historic highs years later. All of Europe had to buy weapons from America again. So the bad part is that, in the end, America may have to end this in war. I hope we're wrong, but wars are looming on different fronts, and there's a possibility of a war in Africa soon. There are a lot of signs in that direction. I hope I'm wrong, because war is the result we least like, but it seems inevitable. Let's get started with our charts. Gold. There is a significant consolidation happening in the market. The 200-day moving average is at 1910, and if the price can close above 1930 and possibly break through 1948, we could see the beginning of an upward movement. However, all the levels I've given on the screen are positive retracements for short-term trades, but I see them as buying opportunities for medium-term positions. A major breakout would require price closes above the levels on the screen. As for silver, it has been somewhat negative this week. Last week, I mentioned that any daily close below $24.04 could lead to a correction, and we've seen that happening. In the short term, the price is still below the trend levels, and there's pressure from the Western financial system. $23.54 is a key level to watch for short-term traders. If there's a daily close above it, it could create a buying signal. However, for the long term, we need a weekly close above $23.88 for a significant move. The ultimate target is the $25.60 level, but it hasn't shown any signals yet. Short-term pullbacks are seen as buying opportunities. The gold-silver ratio is in a consolidation phase, and we are currently in a sideways market. Breaking below 81.50 could initiate a downward movement, and a weekly close below 78 would be a significant signal. This ratio is crucial because it affects all precious metals. A downward break in this ratio is necessary for significant rallies in the precious metals sector. Platinum is experiencing some consolidation as well. It has found support around $924, and if it can hold above this level, we might see an upward move. Platinum isn't ideal for short-term trading but could be considered for medium to long-term positions. In the euro versus dollar pair, if it stays below 1.0802, it's likely to continue its downward trend. The pound is in a similar scenario, with a clear downward direction below 1.2675. Short-term traders might consider 1.2489 as a level to watch. The euro versus yen pair is still waiting for a major trend reversal in the broader markets. If 159.75 holds, it's likely that optimism will continue in the markets. However, breaking below this level could trigger a significant market downturn. Looking at wheat, there's been significant pressure in the market, but it has created a base around $568. Keeping an eye on daily closes above $580 can signal a positive move. Wheat is crucial as it's the main ingredient for bread production. Iron ore is essential, especially considering China's dominance in this market. China's recent actions have affected iron ore prices, and any changes in Chinese policies can have a significant impact. Currently, $113.50 is an important level to watch, and a break above it could lead to significant movements. Brent oil is a critical indicator for the broader financial system. It's currently targeting $100, with $103.54 as a potential level. As long as it stays above $88.50, the upward momentum is expected to continue. Natural gas is another energy product to watch, with $2.63 as a significant level. If it closes above this level, it could accelerate upward. There's been consolidation between $2.46 and $3.01, and breaking above $3.01 can lead to a more substantial rally. Lastly, uranium is on the radar due to recent developments. It broke out of a triangle pattern and has the potential to reach levels of $60, $70, and even $77.77. However, caution is advised as short-term pullbacks are possible. In these complex times, I'm providing different perspectives to help guide you. Remember to subscribe to my channel for timely updates, and I wish you all careful and profitable trading in these challenging markets.